May FOMC meeting minutes. So entire PDF is important for beginner trader, but you should focus on important thing which can be helpful for you as a trader. But info in this PDF depends on your level of understanding. And sometimes you get key information before big monetary policy change, but power of FOMC meeting and minutes both are almost same, but power depends if there is a big change or not. So few highlighted things which I think are important. Asset price were less volatile. They are talking about market movement. SP 500 is sideways until it break out either downside or upside from that sideways range. You will not see big change in their monetary policy tone. Indirectly, maybe they are talking about SP 500. And same thing is with dollar, that is also sideways. And investor sentiment around banking system. You know, we all know about Silicon Valley bank run, but now sentiment are stabilized. That is why on bank run they were printing, that's mean QE, but now their temporary QE is ended and QT is back. But that entirely depends on market sentiment. And they are talking about debt ceiling, and they are saying the rate are likely peak for current tightening cycle. You know, if you study past rate hike cycle, then since Paul Volcker time rate are going down, they went zero, and this did not happen in one time. This happened with multiple crises. So they hike from 0% now 5.25. So they are saying current cycle is now making a peak. So indirectly they are talking about rate pause. And after pause, everybody know next is only rate cut. So they are saying this cycle is ending. And they are saying much higher probability for peak rate between 5.525 than they did in March. So this is their target range, and now they are saying possibility of this peak rate is now more than March FOMC meeting, and this is your May FOMC decision. And because of monetary policy lag effect, you can expect all the reason for peak rate will only increase in next FOMC meeting. And most important thing, because pause is about last hike and first rate cut. So now they are saying clear expected peak rate to be maintained through January 2024 FOMC meeting. So this is your expected timing between last hike and first cut. That's mean length of your rate pause. And clearly it is less than 1 year. So that will decide their tone. Because if they decrease timing, then that will be dovish sign. Because of lag effect, easily this decision can be shifted to December this year, then November FOMC meeting, then September FOMC meeting, and they will do meeting by meeting. They will not say this thing in one attempt. And only thing that can increase timing of rate pause, already explained in SP 500 video, that is AI bubble. and they will not directly talk about Nvidia stock or AI bubble, but they will communicate indirectly. And balance sheet runoff, because that March month what you saw was temporary QE, and now they are again reducing balance sheet size because rate hike will pause. But what will happen to balance sheet size? They will keep reducing, or this process will also stop. And in news, especially Bloomberg, they are using the word skip, not the pause. That's mean they can skip June FOMC meeting and do a rate hike in July FOMC meeting. But until we see June FOMC meeting, these things are only speculation. And their swap dollar policy, every week they are still printing money with their swap dollar monetary policy tool. And this data is related to loan, and we have first quarter information, and everyone is waiting for second quarter data when we will know how Silicon Valley bank run affected the economy. But for that we have to wait for second quarter, and this data comes on quarterly basis, does not come every month, but this time it will be important. And jolt report, because for example CPI everybody know, but Fed see different indicator PCE. Same like that, there are many indicator which Fed see, which ultimately decide Fed monetary policy decision. So these are one of those indicator will decide Fed monetary policy decision. Another one is ECI, and they are also talking about oil price. And to confirm stagflation, we need higher oil price. And OPEC again last week gave clear signal about oil price. They are constantly watching any breakout upside or downside. Since oil price are sideways, so they are not making new decision, but they give signal to the market. So higher oil price will only increase inflation. And your Fed watch tool, these are curve like this, they always move, and they are moving once again right now. So they are saying that path of Fed rate was different before Silicon Valley bank run and different after they started QE monetary policy. And now they are doing again. If 5.25 is your peak rate and May FOMC meeting is your last rate hike, and now they are again playing with that curve. So curve is again moving higher than 5.25. They are not doing rate hike, but in bond market rate are moving more than 5.25. And that's the problem with rate pause. Even they officially do no rate hike in June FOMC meeting, but they will repeat this thing one more time. And they use the word great recession, because last time from 2007 to 9 there was recession in USA, and this has many names. Most popular one is GFC, and some people call it housing bubble crisis, and they also call it great recession. But main thing is they are talking about 2007 to 2009 crisis, and this is same what I said in December FOMC meeting in this video. They are repeating same strategy, and our prediction for peak rate is same 5.25. We do not have that information in December last year, but this year they are talking crystal clear about last recession in USA. And PCE CPI is for inflation, but their main focus is always PCE, and PCE went up for last 2 months, so it is not going down. It is bad for Fed inflation fight. That is why on Friday gold went down after PCE number. Inflation well above longer run 2% objective. They are not saying clear, but 2% mean inflation on PCE number. So PCE number is more than 2%. So that is why they are pausing interest rate but not cutting interest rate. When their target is achieved, then they will cut interest rate. And they are saying interest rate sensitive expenditure. So they are monitoring everything. For ordinary person, his job and saving, these two are enemy of Fed. He wants to see him jobless. He wants his saving to disappear. Once these two things are gone, then problem of inflation will solve. If company offer him a new job and salary is 1 upon 10 of his last job, he will accept job, because he has to choose between poverty and less salary, and this magical thing will reduce inflation. But in simple language, they want to make you poor. So more poor, less inflation. And payroll gains, they are talking about NFP. This week on Friday, NFP is last before next FOMC meeting decision. And this is most lagging indicator. It moved very slow. By the time we see NFP number below 100, 0 or negative, it will be too late to think about economy. And their May FOMC meeting, 25 basis point rate hike. They are saying all participants agreed. So everyone was agree for rate hike. But now some people are saying for rate pause and some are saying for rate hike. But in June FOMC meeting, we will get crystal clear answer that interest rate pause decision was made by one FOMC member or by all, because last FOMC decision was made by all participants and it is written clear. And rate hike is one thing, another thing is QT, the balance sheet reduction. All participants agree. So everyone is agree for hike and balance sheet reduction. And most important thing, lag effect of monetary policy. In June FOMC meeting, there will be 1 year for their first 75 basis point rate hike. Because last two rate hike before coronavirus came in 2019, there was recession. Before that recession, the rate hike was very slow and size was small. And before that, GFC, same thing was there. But this time, in 1 year, they did rate hike and that is very aggressive. And last time this thing happened in Paul Volcker time. And once downtrend start, lag effects become crystal clear in economic indicator. Rate cut will start. So aggressive rate hike is equal to aggressive rate cut. and we have to see how their tone change till November FOMC meeting. And I think they will start rate cut either in November FOMC meeting or before that.